My background is mostly in Wall Street. So my introduction to Bitcoin and the way I saw Bitcoin from the beginning was from that perspective. So I wasn't coming to it necessarily from the technological front, and I wasn't to it necessarily from the philosophical angle. I saw it. And my first question back in 2011 was, is this an asset class? Because if it is an asset class, if it's a new asset class, then the potential is enormous, because there's 100 trillion, $200 trillion worth of investable assets around the world, and they're very competitive with each other. The hedge fund industry, the private equity industry, they're extraordinarily competitive, and they're all looking to, get the edge on the other guy in the industry. And if Bitcoin enters that arena as an asset class, and you have hedge funds starting to outperform based on their Bitcoin position, you're going to have this huge groundswell of capital moving into Bitcoin. And I think that's the stage we're at now.
Max Keiser explains why everybody should be careful about buying gold, because lots of billionaires are reportedly dumping gold for Bitcoin, and why he thinks the new asset class like Bitcoin contains a colossal potential. Keiser also advises that people should have a certain position into Bitcoin. Max also explains how the governments around the world has taken a monopoly on gold to protect their own currencies.
So even 1% of that multi-$100 trillion funds available, moves the needle on Bitcoin. It moves it up considerably. So if you get into the 5 to 10% range, and then you start to see it really race ahead to those very, very 7-figure type predictions that people have been making, including myself, for years, because it is an asset class. Now, on the flip side, you have what we saw in the gold market, which is that the ability to control price discovery and manipulate prices is real through the derivatives market. So the price of gold has been lagging inflation for 20 years because the governments around the world don't like gold making their fiat money look bad. So they make it easy for huge funds to manipulate the price of gold and to scalp and to continuously skim profits off gold, which is what they do almost every day. You can watch it and see it. It's pretty clear. And they are very good at keeping the price of gold and silver down. There are something like, for every ounce of silver, there's probably 50 ounces worth of derivatives floating in the various exchanges around the world that are used to keep the price of silver down, because governments don't want gold to race ahead and to draw capital out of their fiat money scam into gold. With Bitcoin, we have the ability to pull our private keys, which is not really available in gold. Technically, people can take delivery of gold on these exchanges, but there's never been an organized attempt to do so. We tried to do it a few years ago with Crash JP Morgan Buy Silver, because after the 2008 financial crisis, when JP Morgan ended up buying Bear Stearns effectively for nothing, they inherited this huge multi-million short silver position that Bear Stearns was managing at the behest, presumably, of the government. The government likes to stay involved. And so I did some calculations, and it became clear that if this short position wasn't covered, and the price of silver got to $60 or $70 an ounce, it would bankrupt JP Morgan. So we started this Crash JP Morgan Buy Silver campaign, and we got the price from 15 up to 50, which was the old a bunk, the bunker, the Hunt brothers. The Hunt brothers got a price
in
up
the 80s.
in the 80s into the $50 range. They were cornering silver. So we got it back up to the old Hunt brothers $50 level. And then the feds, of course, came in, and they changed the laws overnight to make it possible for these banks to have and carry much greater short positions in silver. So they printed up a lot of paper silver derivatives, and they stopped the run on their bank, and the price went back to 15 or so. So we've seen that it is possible to force capitulation in the silver market. But at the end of the day, because the ability to pull private keys is not like it is with Bitcoin, I don't think it will ever succeed. Whereas with Bitcoin, you can pull your private keys, and that is what the late great, I shouldn't say late, but the former Bitcoin superstar Trace Mayer started a campaign that on January 3rd of every year, people would pull their keys off exchanges as a way to maintain integrity and to prevent these derivatives bubbles from building up to excessive price manipulating levels.
Max Keiser, a Wall Street veteran, shares his unique perspective on Bitcoin, approaching it not from a tech or philosophical angle but as a potential game-changing asset class. With investment giants acknowledging Bitcoin's role, its recognition could signal a deluge of investments. While commodities like gold and silver face manipulations, Bitcoin's qualities, such as the ability to pull private keys, offer distinct advantages against price control. As the traditional fiat system falters, a new financial age, championed by Bitcoin, emerges. Keiser's insights shed light on Bitcoin's potential to reshape financial systems, empowering individuals with newfound economic sovereignty and disrupting entrenched power structures.
Short position to skim 1% every couple of days in perpetuity, right? So that's a risk these banks will take. But with Bitcoin, you really, if BlackRock or the Saudis or somebody came in and said, we're putting an order in for $500 billion Bitcoin, and the price goes from 30,000 to 120,000, that's a huge move, and you're going to get wiped out if you're short. And so it's going to be difficult to maintain an anti-Bitcoin price suppression cartel because the upside is just too incredible. It's you're talking millions of dollars a coin. And so there will always be at least one of these players to drop out of the cartel. You won't be able to get a cartel organized. So that's one thing that Bitcoin has in its favor. Additionally, it's easy to pull the keys. And then thirdly, you just have in the background the ongoing collapse in fiat money world. I mean, the fiat money world is really at the end of a 300-year period or experiment going back to the creation of the Bank of England, and this idea that fiat money could work. I mean, we know after 300 years that it never works. They all go to zero. None have ever survived, or they're lost 99% of their purchasing power. So I think we're entering a new epoch where the fiat money is going to be history. The CBDCs that are coming out by central banks are just an attempt to reinvent fiat money. It's not going to compete with Bitcoin. People are going to see Bitcoin as the path away from centralization, CBDCs, and everything else that comes with it. And they're going to continue to embrace Bitcoin as a way toward economic freedom and just freedom in general.